Okay, so first of all, thank you very much to all the speakers. You guys have done a great job to get through the things you needed to say and give us a higher level overview. What we'll do now is Q&A time, if you'd like. Questions?
Hello, my name's Tyro. I'm company IPTMA, and I'd like to direct my question to Brad to start with. One of the major industries that Austrac oversees is the remittance industry. It's a quiet industry, but one of Australia's largest, $50 billion, according to your report last year. Unfortunately, it's having a lot of problems with maintaining bank accounts, and this is where it crosses over to other regulators. A lot of these businesses are acting above and beyond what the regulations are, but the banks are closing their accounts down without any format or any visibility as to why. And the scope of those closures don't stop with the remittance company's account. I know one lady who's had 25 accounts closed down across a whole family. The remittance industry is doing what it can to survive by setting up new companies, accepting money until the bank closes them down, and so on and so forth, which is increasing risk to the nation. How are you helping the industry maintain bank accounts, and is that a discussion that's crossing over with other regulators? I know the industries themselves are at breaking point, and a lot of them are developing countries, supplying money to developing countries.
Interestingly, at the last one of these that I did, I think that was the first question that I got asked also. So it is something that certainly is on the minds of people who provide remittance in Australia. But there's a couple of things that I will say and can say in relation to this particular topic. Firstly, the sector did transfer $50 billion of funds out of Australia in the last year. And there are still currently 4,600 entities that are operating and reporting or involved in the sector as of today when I had a look, which is why I had that figure. So there is still plenty of involvement within the sector. There's about 500 of those which are independent remittance dealers. There's no doubt, and I'm certainly not going to deny it, that there hasn't been activity by financial institutions in Australia in terms of debanking remittance accounts, and that's not something that's Australia-centric. That's actually happening all over the world, and there are actually many reasons, or many possible reasons, that it is occurring and is continuing to occur. And certainly one of those is certainly money laundering, terrorism financing risk. There's no doubt about it. That's absolutely the case. And it's absolutely the case that Austrac has taken action and will continue to take action in relation to business that are doing the wrong thing. So certainly you would have seen in the last couple of years where we actually closed down a company that was suspected of terrorist financing in Australia. We have, I think, refused registration on about 8 or 9 occasions and cancelled as many, if not more, and imposed conditions on the actual registration because of the risks that they pose to money laundering. There's certainly been multiple businesses in Australia where the people operating those businesses are currently in jail for laundering money, and they're actually investigations of the AFP and the Australian Crime Commission. So there are risks, and whenever we've spoken about it, we actually highlight those risks. But what's important is we are also working with that sector. They now have an industry association, APRA. We have met with APRA on multiple occasions, and that includes myself as well as the Austrac CEO. They are now implementing processes to improve and professionalise that sector. So we're supporting them in relation to what they are doing in that respect, and we'll continue to support them. And you may well certainly see sort of media and other things from that group sort of going forward in relation to what they're doing, the certification, or in terms of their improvement and their process. So there's a lot of things happening in respect to that. There's ongoing dialogue with obviously the financial institutions as well in terms of how, not just in Australia, but more globally, how this issue can be addressed. So it's certainly not simple. It's not an easy an easy thing to fix. There has been a significant amount of government involvement through the Attorney General's Department and working groups with banks and industry, Department of Foreign Affairs, etc. So, I mean, that's probably about as much as I can say. One of the things that we can't do is tell a bank how or not to deal with a particular customer, just in the same case that we wouldn't come to you and tell you how to deal with a customer of yours. So there are some considerations there, and that's obviously where other regulators have been involved, and there has been things such as the ACCC have conducted investigations that I'm aware of and may continue to be so. So yeah, it's certainly a challenging situation for the people involved in the sector, for the customers that actually go to them, and more broadly for us in terms of how we continue to try and make sure that the remittance business thrives in Australia and they continue to provide support, which we actually absolutely recognise is important for financial inclusion around the world. So, thank you.
Hello, this is Gopal from Enterprise Horizons. I'm an independent financial services consultant. So I think I'm going to mirror some of the questions most fintechs have in their mind. Mark, we last spoke at the FCA conference when you signed a deal between FCA and ASIC about the conduct. Most of my clients actually struggle with one concept, which is how do you turn fintech innovation towards what it really means for banks and fiduciary licensed service providers to provide prudent financial advice in an automated sense. You said some of your bugbears, or actually you're most excited about automated advice in the next 3 years. Most of my clients are looking at bracing that, but at the same time they're afraid of what it means from an APRA sense, what it means from an ASIC sense. Let's say, for example, forget my clients, right? If I want to get automated advice myself, right, in order to maximize my benefits, I know there's a banking framework, I know there's a Austrac framework, I know there's a identity framework and a reserve framework and everything else. It's fantastic to get you guys together. But how do somebody in the market turn what ASIC's open to in terms of CP 254 around openness to robo-advice towards turning it into something APRA will then say, yes, I endorse your models about how you recommend advice to customers. So it's more a joint question to APRA and yourself, for that matter, about how do APRA perceive CP 254 and how does RG 146 kind of get in the way, but at the same time, can we change the model, for that matter? I know it's too many questions together, but
quite a lot in that. So all those numbers, I think, is you're referring to the CP, that the consultation paper we put out on digital advice. And so my message is fundamentally still, come and talk to us. So if entities have got question marks, concerned about where they go, I think I just want to allay the fear, which is partly underlying what you were saying, is come and talk to us. And as I say, with those graphs I had before, most of the entities that are talking to us are in that digital advice territory. So we can assist people thinking about what kind of business model they're wanting to do, what kind of challenges come up around their organisational competency, how they can meet their fundamental obligations that apply to all advisors, whether they're digital or not. So I think that's my fundamental message. In relation to engaging with APRA, I mean, you can correct me if I'm wrong, Neil, but I don't think APRA is not on the front line of dealing with financial advisors. Obviously, there could be groups that make use of financial advisors, and there could be alliances and partnerships. Short story is ASIC and APRA are in dialogue on many things regularly, and to the degree that there are relevant issues that come up in a conversation with us, we would refer that to APRA, and we're doing that from time to time at the moment. It hasn't come up that often, but the relationship is such that we would say, okay, APRA, I think there's an issue here that you might be interested in, and I think, you can tell me if I'm wrong, Neil, you're prepared to meet them as well. So it's come and talk to us, and I think we've got a dialogue, which means that matters get referred to each other.
So all I'd say is ASIC have set up a really great system here to kind of capture questions from this sector and pass them around. So questions come into APRA either because someone wants to work with a regulated entity and the regulated entity approaches us through its normal channel, or through the ASIC hub. And the ASIC guys realise when it's something that APRA needs to opine on and forward it to us. So there's some active cases like that right at the moment.
Cheers, mate. Hi, I'm Simon Weeks from Casper. We're a social money network due to be released shortly. We'll do a number of things, but part of it's been designed to do instant payments internationally, no matter where you bank. Question for Tony around the NPP. Do you have an idea as to what the NPP is to cost? And if you don't have an idea of that, what the RBA's budget is for the NPP?
The pricing of NPP services will be that'll be up to individual financial institutions that participate, and that's clearly not something that is discussed around the table. That will be decisions that will be taken by individual parties. My expectation is it'll be relatively low cost, but I say that without any evidence for that. In terms of coordination with international systems, I think our first priority is to build a system that for account-to-account transfers in Australia, but the design uses the ISO 20022 standard, and that's increasingly becoming the standard for international fast payment systems too. So there's every likelihood that at some point in the future, the NPP will be able to connect up with international ones, but that's something down the track. Let's get launched domestically first.
Next question.
Hi, my name's Jessica. I'm from Tyro. So one of my responsibilities at Tyro is to build out our deposit book. This question's kind of directed at you, Brad, I think, but it may be relevant to someone else on the panel. One of the challenges, obviously, in setting up a small business for a bank account is identifying all the beneficial owners for that bank account. And of course, when you get into the realm of trust, it gets even more difficult. I'm just interested to know if there's any intent by any of the regulating panels to set up something that's sort of like a national platform where you can go and get some type of digital business identity. So not only for the fintech players that are trying to work with small business, but also for small business to be able to sort of ping themselves around multiple players and have a little bit more flexibility in who they work with?
Well, I think I'll respond and certainly say that idea has significant merit in what it may do in terms of benefit industry more broadly. In terms of beneficial ownership, in terms of trusts and working out behind trusts and corporate structures, yep, certainly we are very much aware of the challenges that many businesses face in sort of identifying that. Again, I'll probably refer to the review of the Act and say that there may be areas of relevance within that, which obviously I'm not in a position to sort of speak to at the moment. And there are also broader considerations of the government in the context of its work with the G20, and certainly, I mean, Treasury's not represented here today, and so I think certainly can't speak on their behalf, but I think there's certainly broader ramifications. I think things that have happened more recently in the global environment certainly certainly bringing it to the fore in terms of not just Australia, but all countries in terms of what may be done. I think the other point is more around something that I did talk about in terms of opportunities, and I think there are certainly opportunities for more private sort of public engagement around possible mechanisms that would help know your customer, KYC, etc. And again, I would suggest that they would certainly be a benefit going forward.
Okay, so as luck would have it, we have someone from Treasury here. There you go. You're okay to speak on their behalf? Yeah, even if you're not, just go.
Hi everyone, Shelley Davis from the Payments and Innovation area of Treasury's Markets Unit. I just want to say, great question, and I can assure you that it is something that is being thought about across government, not so much from a corporate identity to start with, but as part of the financial system inquiry, the panel made recommendations around establishing a digital identity framework, and there's an area of the government called the Digital Transformation Office, which is currently looking at that project. You know, as you can imagine, something like digital identity is a pretty big thing, and many people will remember past experiences not being so good. So at this stage, you know, work is underway. They're out talking with customers. It really is about designing something that will facilitate from the user's end an ease of interaction. And the project's, you know, sort of a 2-year time horizon, but what I would expect is that something that starts with thinking about individuals could well find its way into thinking about other parts of identity.
So there's a mic over there.
Derek Condell is my name, and I'm a fintech startup down at Stone and Chalk. I'd like to address my question to Mark, and it's got to do with the difficulties of capital raising for startups in this country. And I want to suggest that we have a structural issue that perhaps ASIC could look at. And specifically, it's got to do with a situation where 3, 5, 10, 15 years ago, if you're doing a startup, you could go to your local accountant or local financial planner and say, help me raise some money, maybe $200,000. And the local suburban accountant or financial planner would introduce you to their clients. Sometimes it might be 6 p.m. in the evening. It would be a capital raising evening, and you could walk away with a couple of $100,000. That doesn't happen anymore. Because of the approved product list structure that is required under AFSL holders who are non-stockbrokers, only companies that are on the approved product list can get access to the clients of the financial planners and accountants. And I'm wondering whether you're aware of this, and what I argue restricts startups from getting access to savings in Australia, and whether the whole concept of AFSL approved product lists could perhaps be relaxed.
I don't have a mic, so I'll speak loudly. It's coming. At the heart of your question is compliance with a range of obligations which financial advisors are subject to. The best interest duty, putting priority to the client, and so on. This is really a matter about risk management, about how financial planners are choosing to comply with that obligation. One of the mechanisms is approved product lists. So we do not require someone to have approved product lists. We require entities to comply with that obligation. That is the way that many entities are choosing to comply with that. We do make some comments, I think, in some of our regulatory guides about the use of product lists and the flexibility of product lists in order to accommodate different kinds of products. So I think that's just sort of laying the land. I think I need to talk to you more about the challenging issue you're facing. I did want to make a couple of other quick observations. For a long time, we've had a piece of guidance and some class order waivers dealing with business introduction services. Some of the venture capitalists in this room may wish to opine or make reference to that. It provides relief for people making introductions whilst not falling foul of the prospectus obligations in sort of bringing people to people's attention. There are limitations to that, but that is a mechanism that I understand has been used now for many years. So a query is whether that is also being challenged. And then down the track, I suppose the concept of equity crowdfunding is directed towards providing another mechanism for opportunities of raising capital. So that's, I suppose, my perspective on it. I think to understand more deeply your issue, I think I need to chat with you later.
Thank you. My name's Michael Perkins from Perkins Fay. First, an observation, the ATO is not here. And with the prospect of the Common Reporting Standard coming forward, my question to the panel, and whoever wants to answer it, is there any work being done with the ATO and the Common Reporting Standard around linking the wealth statements that are going to be created for Australians around their net wealth and their financial transactions, and perhaps that alignment can create a channel for a trusted identity that meets a lot of the other concerns that have been voiced here this evening.
I mean, I do want to suggest to you that there is dialogue with ATO. Today we had an ATO liaison meeting between ASIC and ATO. So we've got 5 regulators here today. I think we're doing fairly well. I mean, yes, ATO may be an entity that needs to come along to a future session. I'm not on the front line, and I just quickly asked, and Este may have an observation, but the common reporting standard, I'm not on top of that. Is that in the context of superannuation? No, more broadly.
No, that's more broadly. That's about the ATO having supervision through the G20 and the common reporting standard for a summary balance sheet for every taxpayer.
Okay, so let's say there's developments occurring, including the ATO, around reporting of wealth statements and so on. And the opportunities there may be for digital identity and other forms of things, I think, need to just be grabbed. I mean, we've got referral mechanisms. I think we engage with the DTO, we engage with Austrac. So bringing that to bear so that it's not lost as an opportunity.
Yes, because given that this is a fintech discussion, there is an underlying reality of the balance between income expenses and assets and liabilities.
I will try to summarise that. I think this gentleman here has some excellent observations in the way that entities are responding to the challenge of providing information about people's wealth statements or wealth positions, and that may provide opportunities to support, I suppose, identity outcomes and compliance outcomes with a range of obligations, including Austrac. So, I mean, my quick comment would be to say, let's grab your details and let's make sure that we connect you to the right people, like the DTO office and people at Austrac, so that this thought and idea is not lost.
Next question's up the back there.
Hi, my name's Tim Lee from a company called Regulators. And first of all, I think it's great that we've got 5 regulators here. That's awesome. My question is, on an ongoing basis, are you guys collectively working with the guys that are driving the innovation statement at a federal level? And the second part of that question is, if the government changes, is that still going to continue?
So in short, the answer is yes. So the innovation statement is clearly a headline thing that's driving the government. There's a huge machine that sits behind that innovation statement across the whole of the Commonwealth that is clearly marching at a great pace towards delivering on things. In terms of the question about what happens if the government changes, that's something that, as a government officer, I can't speculate on, but I think you've seen positive calls from both sides of the parliament around innovation and the need to drive productivity improvement in the country. So I think whilst things in terms of who governs the country might change, there is a strong push from both sides to keep thinking about productivity. And where we are right now is delivering on the government's national innovation and science agenda. And, separately, it's issued a fintech statement and a fintech agenda, and it's really right behind you all and looking at working with the regulators to find ways to ensure that Australia's out there leading at the front in the world.
Chris McHerrick's my name. That's actually a great lead into the question I was going to ask, and it was around the innovation statement. And we've seen a significant investment from government, I suppose you'd say, in relation to the fintech space and certainly a focus on that space. And I'm wondering from a regulatory perspective, we've got 5 regulators up there regulating potentially one industry, and the tax laws have been mentioned as well. I'm wondering what's changed or what initiatives have been implemented or encouraged from a regulatory perspective to encourage innovation in this space, and what the relevant agencies are doing. And we heard a little bit in relation to privacy, what's happening in that space. I'm just curious what's changed or what will change in relation to the other agencies to keep encouraging innovation in this space.
You mentioned that I did speak to some of the things that we're doing. I guess from our perspective, we see that, or we recognise that the use of data can provide huge benefits to the economy, and businesses can grow out of their use of data. So what we're trying to do is make sure that people understand how the Privacy Act and privacy considerations can help drive that commercial success. So understanding what the obligations are. There's often a misunderstanding around privacy, and people say, "Oh, I can't do that because of privacy." That's not the case. Privacy just, in effect, helps you achieve success. So we're, as I said, issuing some guidance aimed at the fintech and startup community to make sure that they understand what they can do to use privacy to help them achieve good outcomes in their business. That's my take on it.
Where do I begin? I suppose I just want to highlight a few things. The Innovation Hub is our major initiative, which is making available resources to meet with people, bringing senior people into rooms to engage in informal assistance with entities. That's free, that's quick, and that's useful. That's the feedback we're getting. We can obviously improve, but that's at the heart of what we're doing. We're also meeting with entities, we're collaborating with entities, we're creating networks internationally. They're just some of the initiatives. We've already provided waivers to provide and facilitate small entities in terms of providing financial services. So I think that's at the heart of what we're doing. Happy to take more on that separately with you afterwards. Did you guys want to say anything?
Well, I think I'll just reaffirm that. I think there is certainly all those things happening. I think when I spoke in terms of what Austrac's doing, it's certainly about non-traditional partnerships is something that we're certainly looking at within our space, not purely as a regulator, but also as our role within our intelligence, etc. So yeah, there's certainly plenty of things happening. We have our own innovation teams that now exist, which didn't exist probably a year ago, and we're certainly embracing that ethos in terms of what we are doing, and we are actually out there engaging with many of, if not yourselves, but certainly other areas in terms of bringing sort of innovation and sort of fintech to our own thinking in terms of how we are operating. And we will continue to do that, I think. To the previous question in terms of whether government changes or not, I think it's a little bit irrelevant in terms of also what we are doing ourselves in terms of building a sort of innovative approach to how we operate.
Yeah, look, I just echo those comments. I think the government's innovation statement creates a context, but we're kind of independent agencies here, and actually what we're doing is really responding to what's happening in the environment rather than some top-down thing driven from Canberra. In terms of, we have regular engagement across this group in a number of different forums, and recognise the importance of this. We actually have now a completely separate engagement on fintech type issues.
I'll respond very briefly. 6 years ago, the Reserve Bank announced a strategic review of innovation in the payment system. So it's something that we've been working on for a long time. It takes a long time to build infrastructure. So the main thing that we've got on our plate is working with the industry, with APRA, who are represented here tonight, on the new payments platform, which will be a wonderful set of new rails for the payment system in Australia, and should encourage all types of new innovation.
Hi, Kurt from CBA. My question is to Mark. I think, Mark, you touched on the crowdsourced equity funding earlier. Are you able to provide some further insights on, at least from ASIC's perspective, in regarding to how crowdsourced equity funding is going to grow or prospect in Australia? Because as far as I know, globally, it has been a fairly controversial topic. There are some regulatory bodies overseas, they're quite supportive to it, and some they are rather taking a fairly contractual view towards that. Thank you.
Okay, so equity crowdfunding, a few things I can probably say. So one, in terms of the legislative regime, in terms of retail client equity funding, that is a matter still being considered at Parliament. The question is whether it will get debated before the election. Just stay tuned on that. The government, in its statement just recently, made some messages about where it might be amending that regime. Let's assume it got passed and regulations were made, I think our intent would be then to indicate how we might implement that approach, how we would approach the entities for the way we'd approach intermediary licensing, consult on that and finalise that. The legislation itself says there's a 6-month period between its passage and commencement. So that's the sort of regulatory setting, and that's all still dependent really on what happens through Parliament. So keep watching that space. In terms of international interests and perspectives, I'm just going to stay neutral on that. I would point you to a number of IOSCO publications. More recently, there's been a report looking at comparisons across various jurisdictions about how they're approaching this question. It's been obviously implemented in a number of jurisdictions. The papers at the IOSCO, that's the International Organisation of Securities Commission, there's a paper there that goes through some of the issues, the challenges. There are risks, and you can imagine that regulators care about quality of disclosure, whether maximising people's understanding about the risk that they're taking on. So they're just two of the examples. Conflict management is another one in relation to the platform operator. So they're just some of the regulatory issues that are touched on in that IOSCO paper. Otherwise, I'm just going to stay neutral. I'm not even going to attempt to say about growth. But those reports that I referred to report growth patterns. And I think in UK, if you take that as an example, there has been a growth pattern.
Okay, so I'd like to thank everyone who's been here, and kind of, you have to understand it can be a fairly kind of scary thought for regulators to find all these disruptive people in front of them trying to say, oh, how do we get around what you're doing and how you're going to change. So it's awesome that they're here. It's proof that they're listening to us, and it's a really good sign for Australia and how we're thinking about innovation in the fintech space. And of course, thank you to all of you for coming along. Thank you.